Here are the crypto top headlines covered in this video. Spot Bitcoin ETF approved in the US. What to expect next. Also, CoinShares exercise option to acquire US Bitcoin ETF issuer Valkyrie. Plus, Hedera and Algorand partner to develop decentralized wallet recovery system. Welcome to Crypto Top Headlines, where there's no clickbait thumbnails or titles, and no speeches on my opinions, just bringing crypto's news to you. We are a new channel here on YouTube, and would greatly appreciate it if you would click on the like and subscribe buttons, as well as the notification bell. It does help support the channel, so thank you in advance for doing so. Now, on to these headlines. Our first top headline, Spot Bitcoin ETF approved in the US. What to expect next. Industry experts predict what to expect next following the approval of spot Bitcoin ETFs in the United States. On January 9th, the United States Securities and Exchange Commission scrambled as it tried to recover from an erroneous tweet announcing the approval of a spot Bitcoin exchange-traded fund. This left many members of the cryptocurrency community on pins and needles, but just a day after this chaotic event, the SEC officially announced that it had approved the first regulated spot Bitcoin ETF in the United States. While notable, many people may now be wondering what to expect next. The approval of spot Bitcoin ETFs in the US will further lead to the institutionalization of Bitcoin, but industry experts have pointed out that other factors will come into play. New opportunities for retail investors. Yesha Yadav, professor of law and associate dean at Vanderbilt Law School, told Cointelegraph that the introduction of a spot Bitcoin ETF holds enormous significance for the cryptocurrency and financial markets. She said, most immediately, it will provide a way for everyday mom-and-pop investors to safely gain exposure to Bitcoin. ETFs are a well-regulated, retail-friendly product. This should mean that via a spot Bitcoin ETF, crypto markets are likely to become a lot more accessible to investors who might otherwise have stayed well away from participating in a much less regulated crypto market. This may be the case as the securities regulator approved 11 Bitcoin ETFs on January 10th, including the 19-B4 applications from highly credible institutional players such as Grayscale, BlackRock, Fidelity, WisdomTree, Valkyrie, and others. Leo Wald, CEO of Valkyrie, told Cointelegraph that Valkyrie's spot Bitcoin ETF will be available to U.S. investors through their brokerage or investment accounts. Any investor will be able to purchase shares of our ETF, which will be available for trading on the NASDAQ. Wald added that Valkyrie is anticipating upward of $400 million in assets to flow into its ETF during the first weeks of trading. We think that we will see billions in assets flow into the ETFs over the first month alone. Many investors have been waiting on the sidelines for products like this. While it's too early to accurately predict the performance of newly launched spot Bitcoin ETFs products, Alex Tapscott, author and managing director of 9 Point Digital Assets Group, told Cointelegraph there may be similarities between U.S. spot Bitcoin ETFs and Canadian spot Bitcoin ETFs. For reference, Canada gave the green light for its first spot Bitcoin ETF in 2021. According to Tapscott, 9 Point Digital Assets Group launched a spot Bitcoin ETF in Canada in May 2021. He said that Purpose Investments was the first fund to launch a spot Bitcoin ETF in the region, adding that the firm claims to have brought in over $1 billion in assets within the first month. This is an important data point to consider because the U.S. crypto market is 10 to 20 times bigger than Canada's market, measured by population and investable assets, said Tapscott. Yet, while retail investors may benefit from a spot Bitcoin ETF in the U.S., some believe that institutions may not be as enthusiastic. Canadian venture capitalist and CNBC personality Kevin O'Leary told Cointelegraph institutions won't want to pay the fees associated with spot Bitcoin ETFs. Personally, I would never use an ETF. Why would I pay those fees? I mean, it's ridiculous. Cost that is not needed, particularly with an asset that is a total commodity in the case of Bitcoin. However, some experts beg to differ. Bloomberg ETF analyst James Seifert told Cointelegraph that institutions might use the spot Bitcoin ETF. If they want Bitcoin exposure, the spot ETF will be their vehicle of choice, but this may take some time before that happens, he said. Perry-Ann Boring, founder and CEO of the Chamber of Digital Commerce, told Cointelegraph that she believes institutional investors, such as pension funds and asset managers, typically prefer regulated investment vehicles. The approval of a spot Bitcoin ETF would likely attract greater institutional participation in the cryptocurrency market, potentially leading to increased liquidity and market stability, she said. Will a spot Ether ETF be next? In addition to retail adoption, predictions around the eventual approval of a spot Ether ETF are also circulating. Tapscott noted that spot Ether ETFs were approved shortly after spot Bitcoin ETFs in Canada. After Canadian regulators approved the spot Bitcoin ETFs, there was not a good reason for them not to approve spot Ether ETFs. Keep in mind, though, the market for Ether is smaller than Bitcoin. As a result, there will likely be a meaningful demand and significant impact on the price of ETH. Vanderbilt's Yadav added that if the spot Bitcoin ETF in the U.S. proves popular, it may help create greater permanence for Bitcoin and other crypto assets within the financial markets. Greater acceptance of blockchain technology. Tapscott said that blockchain technology will likely gain wider acceptance amid the buzz Bitcoin ETF approval has created around the price of BTC. Everyone interested or involved in the crypto market will become educated about blockchain technology. This will serve as an awakening for most people around the potential for digital assets and blockchain to transform finance and other industries. Echoing this, Kurt Hemmemaker, CEO of the Mina Foundation, the nonprofit organization supporting the Mina protocol, told Cointelegraph he believes this event creates new opportunities that people may not immediately identify. For example, he noted that the spot Bitcoin ETF approval could potentially result in a major boom for zero-knowledge focused projects. Bringing added legitimacy in the eyes of mainstream players, the approval may lead to not just an influx of investment, but also increased adoption. Zero-knowledge blockchains, distinguished by their ability to enable enhanced levels of control over data, in other words, data sovereignty, will stand out to this growing segment of the market that values data sovereignty and security highly, he said. Challenges to consider. Although many positive aspects may be associated with newly approved spot Bitcoin ETFs in the U.S., there may also be some downsides. For instance, Boring explained that counterparty risk will likely increase. Investing in a spot Bitcoin ETF introduces counterparty risk. Investors rely on the ETF issuer to accurately track the performance of the underlying asset. If the issuer encounters financial difficulties or mismanages the fund, it can impact the ETF's value and the investor's returns. Boring added that the market price versus the net asset value of Bitcoin may be impacted. ETF shares are traded on public exchanges, and their market price can deviate from the fund's net asset value. This price dislocation can introduce arbitrage opportunities, but may also lead to unexpected trading costs for investors. Let me pause here for a moment. If you're getting value out of this video, please click on the like and subscribe buttons as well as the notification bell. Our next top headline, CoinShares exercises option to acquire U.S. Bitcoin ETF issuer Valkyrie. After securing the option to acquire Valkyrie's crypto unit in November 2023, CoinShares is exercising the option following Valkyrie's spot Bitcoin ETF listing on Nasdaq. European cryptocurrency investment firm CoinShares is progressing with a potential acquisition of its United States competitor, Valkyrie Funds, which is also an issuer of a spot Bitcoin exchange-traded fund in the country. On January 12th, CoinShares confirmed the exercise of its strategic option to acquire Valkyrie, strengthening its efforts to enter the U.S. market. A spokesperson for CoinShares declined to disclose the terms of the deal to Cointelegraph, but noted, CoinShares aims to be the leading global investment company specializing in digital assets. It was only logical for us to expand into the U.S. and join the race for the spot Bitcoin ETF. According to an official statement by CoinShares, the firm decided to exercise this option as a direct result of the U.S. Securities and Exchange Commission approving Valkyrie's spot Bitcoin ETF alongside 10 other spot BTC ETFs. Called the Valkyrie Bitcoin Fund, the ETF started trading on January 11th on Nasdaq under the ticker symbol BRRR. On its first day of trading, Valkyrie's BRRR ETF traded around $9 million worth of shares, according to data from Yahoo Finance, lagging behind giants like Grayscale, which handled more than $2 billion in such trades. The acquisition is pending the completion of satisfactory due diligence, the finalization of necessary legal agreements, and final company board approval. The announcement reads that Valkyrie Funds is maintaining its operational independence until the acquisition is fully executed and finalized. CoinShares initially secured the option to acquire Valkyrie's crypto unit in November 2023. The option is expected to remain active until March 31. CoinShares' progress in the potential acquisition aligns with the positive developments in the U.S. regulatory landscape and CoinShares' strategy to expand its digital asset offerings in the U.S. market. Exercising our option to acquire Valkyrie Funds aims at extending our European success in the U.S., offering unparalleled access to regulated digital asset products to American investors, CoinShares CEO Jean-Marie Mognetti said. Valkyrie CEO Leah Wald noted that CoinShares' expertise combined with Valkyrie's strengths promised to propel them forward in the American digital asset investment sphere, particularly within the digital asset ETF market. The potential ETF-focused collaboration between Valkyrie and CoinShares would look familiar, as some major European crypto investment firms have already been cooperating with some spot Bitcoin ETF issuers in the United States. 21 Shares, one of the biggest issuers of crypto exchange-traded products in Europe, is a partner of ARK Invest in the issuance of the ARK Invest in 21 Shares Bitcoin ETF, which started trading under the ticker symbol ARKB on the CBOE exchange. Our next top headline, Hedera and Algorand partner to develop decentralized wallet recovery system. Blockchain ecosystems, Hedera and Algorand collaborated on a new alliance and open source protocol to troubleshoot the need for decentralized recovery for digital assets. Major players from within the Hedera and Algorand ecosystems, including the HBAR Foundation and Algorand Foundation, announced the launch of a new alliance called the DREC Alliance on January 11th to build a decentralized recovery system for digital assets. The alliance was unveiled at the Crypto Finance Conference in St. Moritz by Lemon Baird, co-founder of Hedera, and John Woods, Chief Technology Officer of the Algorand Foundation, during a joint panel. According to the two decentralized finance executives, the DREC Alliance aims to streamline the process of securing and recovering digital assets, aligning with conventional Web 2 experiences. Baird encouraged every blockchain and industry to create standards and open source code to bring safety to the promise of Web3 without the complexity. He told Cointelegraph that the industry needs to make it easy for users to recover keys. All blockchains need to work together to create a compatible standard across all wallet software on all blockchains. Baird said that Hedera and Algorand are just the start and that they already have banks, credit unions, and multiple wallet software projects involved. Along with the DREC Alliance, the Decentralized Recovery, or DREC, open source protocol was introduced as a standardized approach to secret management. It is built on the idea of secret sharing among a designated set of helpers, such as friends or businesses, and allows users to recover their secrets when necessary. Each helper's share reveals no information about the original secret, and the system ensures recovery even if a user loses their recovery device. Woods commented on the initiative saying, "Seamless user experience is core to any great product. We need to maximize ease of use and minimize risk associated with self-sovereignty. The DREC protocol operates with automatic confirmations that helpers retain shares of secrets, along with automatic resharing when secrets change or helpers join or leave. Additionally, identities or numbers of helpers do not need to be disclosed. Even the helpers remain unaware of each other. This development comes as the DeFi space continues to grapple with security issues. On January 10th, the United States Commodity Futures Trading Commission, which regulates the U.S. derivatives markets, released a report of recommendations for policymakers and industry players to mitigate DeFi-associated risks. So this concludes our top headlines. If you haven't already done so, don't forget to click on the like and subscribe buttons, as well as the notification bell. Also, leave your thoughts in the comments and share this video with your friends and family. Thank you all for watching Crypto Top Headlines, bringing crypto's news to you.